May 22nd, 2024. That is the date when Nvidia shares went over $1,000 per share. Now, it's important to remember that the same shares in 2017 were just $26. That means a growth of more than 4,000%. And a lot of people in the market are asking, is this still a good opportunity or is it a bubble? What if I told you it's neither? There are actually some criminal activities pumping the price of Nvidia. Now, what kind of growth are we talking about? It's not just about 4,000% between 2017 and 2024. Let's look at this graph and see how Nvidia's revenue compared to its competitors. You can see here, this is in billions of dollars. Nvidia was at 4.3, already ahead of its competitors. And you can see here, it goes to 10.3 billion, 14.5 billion, 18.4 billion, and now 22.6 billion. When compared to its competitors, which are just about 2 billion, that means Nvidia's revenue is 10 times higher than of its competitors. And it's not just that. Nvidia recently announced quarterly results that blew past all expectations, 16% in one quarter, adding almost 277 billion to its market cap. Today, Nvidia has a market cap over 1 trillion, almost matching the market cap of Bitcoin. And here I feel the need to make two disclaimers. First, nothing that I say here on any platform should be considered financial, tax, or legal advice. I'm not saying to you to buy or to sell Nvidia stocks. The second disclaimer is I'm not calling all of that growth a bubble. There are a lot of things which justify some of that growth. After all, Nvidia is the leading manufacturer on AI microchips, and no one can dispute the increased demand for such microchips. We can see with OpenAI and so many other softwares and websites providing AI services. We also see the need for those microchips with Tesla autonomous car, not to mention data centers. And the belief on the continuous increasing demand for such microchips, combined with the belief that Nvidia will remain the leading manufacturer of such microchips, is what justifies some of the growth on that value. On the side of those who believe that Nvidia is fairly priced and there's no bubble, we have people such as Larry Tantarelli, which has a very good argument. He compares the price performance of Nvidia with companies from the dot-com bubble, and he's correct. Nvidia's growth is nothing compared to the big dot-com bubble. Now, where I think he's wrong, he's comparing only the traditional market. In my view, those crazy investors, those speculators who drove the price up of dot-com bubble, they are no longer trading on traditional finance because now there's a market that is easier and faster for them to trade, and that is cryptocurrencies. And Larry's argument is a very good one, especially when he shows graphs to demonstrate his argument. Graphs such as this, the amount of IPOs, initial public offering, or the amount of companies that came into the stock market in one single day. In 1990, 89%. We can see here 93, 437 companies in one single day, with the average first day return of 11%, 20%, 15%. That is the average single day return. Now, it gets even crazier when you look at the 10 top companies. Look at this. Val Linux, in 1999, it starts with a share price of $30 and close with a price of $239.25. That is a growth of almost 700% in one single day. As you can see, Larry's argument is a very convincing argument, comparing Nvidia's growth with the dot-com bubble. The dot-com bubble, we had crazy numbers such as 700% growth in one single day. Also, Larry's argued that the reason why the growth is not a bubble is because the market has learned its lesson, meaning the investors of today are much wiser and have learned their lesson. I disagree with him. Market never learns. Speculative investors never learn. That's why we have the economical cycles. In my view, those crazy speculators found a different market which is more suitable to them, which is the cryptocurrency market. So, does that mean that there's no crazy speculative money on the traditional market? No. It just means that the numbers are gonna be less because most of that money went to the crypto space. Not all, most. And to make my point more clear, I'm gonna show you a video of the ICO bubble between 2014 and 2017, and you're gonna see how crazy is the growth of ICO. Now, ICO is initial coin offering, which is a replacement for IPO, initial public offering. Let's look at the video. So here we have the video, and I want you to pay attention on what happened in 2017, between 2016 and 2017, and you're going to see similar growths. Now here, in this video, we see circles or bubbles showing how much money each ICO got and how many ICOs were there per day. Now you can see here, as we go towards the mid of 2016, you can see a huge growth of 160 million by the Dow. You can see other bubbles popping up on a daily basis. Now 2017, the whole thing pretty much exploded. You can see how many more bubbles are growing there. And look at this, it's just like a popcorn pot. And you can see the US 398 million. You can see the growth of the projects as the circle grow. And one of them, the Telegram company, which is the second largest collector of money, did not even exist after 2017. So I hope this visual video shows you guys where did the crazy speculative money went to. So the question still remains, is Nvidia's growth justifiable or it is a bubble? And in my view, as I mentioned to you guys, some of the growth is justifiable, but some of the growth in my view is just pure fraud, criminal manipulation of the market. Now I know that is a very serious accusation, but I'll be showing the receipts for that accusation. But before showing the receipts and get into the details of the fraud, let me explain to you another fraud which I witnessed on my late 20s, which was the Parmalat fraud, a fraud of almost $4 billion. Now the reason why I want to talk to you about the Parmalat fraud is because Nvidia is doing similar things in a much larger scale, in a much worse way. Parmalat was a dairy company in Italy, and what they did is they create fake clients that were placing orders for Parmalat. Now, those new clients were making large orders, which enabled Parmalat to get more loans from the bank. So Parmalat got loans from the bank because they need to increase their manufacturing because they had more clients. Now, those clients were fake. Now, instead of paying for the loan, what Parmalat did is it continued to create fake clients with large orders, always enable Parmalat to get more loans in order to pay some interest of the previous loans because they were just growing and having more and more clients. Eventually, the fraud was discovered, and by the time they discovered, the damage were $3.95 billion worth. Now, this is for you to understand how Nvidia is working today, and in my view, what Nvidia is doing today is worse than Parmalat. So here we have Nvidia, the company that is producing AI microchips. Now, Nvidia is also a shareholder on a company called CoreWeave, which makes Nvidia a partial owner of CoreWeave. And above those two, you have BlackRock. Now, BlackRock is also a large holder of shares from Nvidia. Now, BlackRock is arranging a loan to be given to CoreWeave. CoreWeave is using Nvidia's microchip as collateral to get that loan. And it's a loan of over $2 billion, which CoreWeave is using those $2 billion to buy more microchips from Nvidia, increasing the sales, justifying an increase on value on shares. How much increase the value on shares? Well, 3%. And remember, BlackRock is also a holder of a lot of shares from Nvidia, which means BlackRock is making money, Nvidia is making money, and the share prices are going up. And by the way, have I mentioned to you guys that CoreWeave has no background on AI? They used to be a couple of guys running a hedge fund that went bust. They also hustle on Ethereum mining. The company has a background on failure hedge fund, mining Ethereum, cryptocurrencies, carbon credit, and a few other shady things. So can you see the similarity? BlackRock is a large shareholder of Nvidia. Nvidia is a shareholder on CoreWeave. CoreWeave's background, as I mentioned to you guys, is not that great. And you have BlackRock giving a loan to this company, which is shady to say the least. Now, can you see the circular money? Very similar to Parmalat. BlackRock giving a loan to a company that is using Nvidia's microchip as collateral and using that money to purchase Nvidia's microchip, increasing the sales of microchips, increasing the value of the shares, making a lot of money to BlackRock, making a lot of money to Nvidia. And as I mentioned to you guys, CoreWeave is a shady company. So to me, there's a lot of similarities between this and the Parmalat case. And it's not just me, and it's not just my thoughts. Look at this tweet, for instance, posted by Samantha Dalug. She said very clearly, sorry folks, CoreWeave is backed by Nvidia, buys $2.3 billion in Nvidia's microchips, with a $2.3 loan from BlackRock using the $2.3 billion Nvidia microchips as collateral, and BlackRock also owns 182 million shares of Nvidia. This is according to her own tweet. And it's not just me and some people on X. Nvidia is fully aware of this. As you can see, their vice president and CFO denied the whole thing. She's saying that Nvidia's ownership of CoreWeave is a very small one, and somehow $2.3 billion of purchase of microchips is a drop in the bucket, meaning $2.3 billion in purchase is not really contributing that much to Nvidia's revenue. I know all of that was last year and does not justify me saying that Nvidia may be involved on market manipulation and fraud. However, this year, 2024, Nvidia made a partnership with another company called Nexus. Now, the leaders of the company, Nexus, are people who have been involved in crimes and are wanted criminals. People such as Daniel Kinahan and Thomas Trey. So, who is Thomas Trey? Thomas Trey's real name is Thomas Oye. He's already been convicted for financial crime in Norway. He's also been convicted for money laundering for large, dangerous organization. And besides all that, he tries to introduce himself as a financial guru. Today, he lives in Dubai. And as a good evidence of who he is, we have here a print screen of his YouTube channel. As you can see, his YouTube channel has one video, more than 17,000 subscribers, and 14,000 views, which suggests that he's buying subscribers. Now, Thomas Trey controls directly over 9.5% of the company. However, his control does not stop there. There's another company, as you can see here, the Titan Capital Irrevocable Trust, controls another 20% of the company. And who is in charge of the company? His wife, Nina Stray. She's the trustee, which means together with his wife, he has a control over 30% of the company. And as you already know, Thomas Trey is already convicted and wanted for financial crimes in Norway. Let's look at Daniel Kinahan. Let's begin with this image, which says a lot. As you can see, there's a $5 million reward for any information leading to his capture or to the stopping of the activities of his criminal organization. Now remember, Thomas Trey lives in Dubai and he shares the same office space with Daniel Kinahan, which is also involved on the same company, Nexus. Now, unlike Thomas Trey, Daniel Kinahan is responsible for violent crimes, and to me, his involvement on the company should be of great concern. It is also a crime for you to enjoy the video, benefit from the content without subscribing to the channel. So please pause, subscribe to the channel, and let's continue with the video. And if you're wondering why am I mentioning Hyperscale Nexus as the partnership with Nvidia, is because it's yet another company that is buying a lot of microchips from Nvidia who has no background on AI. Hyperscale Nexus is also partnering themselves with a company called Accusations. Now, even though the name of the company is an English name, guess what? The company is a Chinese company, and they are the actual buyers of Nvidia's microchips. And as you already may know, the US has imposed heavy sanctions on microchips to China, which means Nvidia are not allowed to sell microchips to China. So if they actually carry on this deal, that would mean Nvidia's microchips are being sold to China. So it seems like those people create those companies in order to get those microchips into China, which is evading sanctions and another criminal activity. Now, let's go back to the first graph that I shared with you guys in this video. Look at the graph. The United States of America imposed sanctions on China on microchip technology, preventing China from having those microchips. Now, coincidentally, that was on the last quarter of 2022. And as you can see on this graph, on the very first quarter of 2023, the revenues of Nvidia keep growing astronomically. So, in my view, there are different components to the legal activities of Nvidia. One of them is similar to the Parmalat deal, where Nvidia becomes owners of other companies. Those companies get loan from BlackRock, which also have ownership of Nvidia, and then gives a loan to get more Nvidia's microchip, increasing the sales and therefore justifying an increase on the values of the shares. But there are also the other incentives such as the one of companies that has no background on AI making large purchases so that those microchips can get to China. At least those are my thoughts on such matters. If you have different thoughts, please let me know that on the comments below.